Hi guys, in this video, I'm going to have an exam review session with a past paper. The paper is IB Economics Paper 2 SL from November 22 exam. Let's give it a go. Question 1. It's about the country Bangladesh and its ready-made garment industry. Question A1. Define the term absolute poverty indicated in bold in the text. I can say that absolute poverty refers to a state where one's income is below certain dollars in a day, or when one cannot meet basic needs like food, clothing, housing, etc. Question A2. Define the term informal economy indicated in bold in the text. It refers to the economic activity that is not officially recorded, regulated, and taxed by the government. Question B1. Using information from Table 1, calculate the unemployment rate for Bangladesh in 2019. I can refer to Table 1, labor force, number of unemployed. So pretty simple. Here's the answer. Assume a shirt was made in Bangladesh and priced at 400 and it is equivalent of a US dollar this much. Using information from Table 1, calculate the price of this shirt in US dollars in 2019. I should use the exchange rate in 2019, which is 84.5, and then I can apply this one with the Bangladesh currency, so I can get the answer as this one. B3, state whether the Bangladesh exchange rate depreciated or appreciated between 2010 and 19. As we can see, the value is increasing, which means you have to pay more to buy American products. So the currency value is decreasing. Question C, using a demand and supply diagram, explain why falling demand will reduce Bangladesh firms' revenue, which is pretty obvious question. I can first illustrate the demand curve shifting to the left and saying a reduction in demand will lower the price and quantity demanded, so it's going to lower revenue that can be given to the firms. Question D, using an international trade diagram for the US market diagram, explain how the imposition of 15% of tariff on garment leads to higher prices for imports for Americans. So the demand is going to decrease. So the revenue is going to be decreasing to the farmers. Question E, using an exchange rate diagram, explain how the change in imports of goods and services from 2010 to 19 is likely to have affected the exchange rate of the Bangladesh taka. So to buy more foreign goods, Bangladesh people have to supply more of their currencies. So it's going to increase the supply of the currency, which means the currency is going to be depreciated. F, using a Lorenz curve diagram, explain what happened to the distribution of income in Bangladesh between 2010 and 19. That the Gini coefficient value increased from 0.32 to 0.40, meaning that the distribution of income has become more unequal in the country. Question G, using information from the text, data, and your knowledge of economics, discuss the extent to which the ready-made garment sector in Bangladesh contributes to achieving the Sustainable Development Goal, like promote sustained, inclusive, and sustainable economic growth, full and productive employment, and decent work for all. Let's see if it works like that. My intro will define sustainable economic growth and full employment. First, I can discuss the positive impact of the ready-made garment sector when it comes to achieving sustainable development goals. This time, I'm going to focus on quantitative economic growth. Ready-made garment sector is the business sector that can provide jobs at the moment. considering the trend of unemployment increasing in the country, this sector is working quite well. Also, it can provide opportunities for women to get employment, which can reduce the wage gap between genders. So both can contribute to increase more equality and resulting better health and education for family members, things like that. And the ready-made garment industry facilitates the movement of the economy towards the manufacturing sector, which can contribute to increase higher value product production. The industry is eligible to satisfy the condition of PTA, so it can trade the items with more beneficial terms. Also, there is expected higher demand from China, so this industry is expected to contribute to achieve quantitative economic growth. Next, I should point out some limitations of the ready-made garment sector when it comes to achieving sustainable development goals. This time, I'm going to focus on long-term sustainability. First, workers are sometimes exploited, and the working condition is not very safe. Also, job security is low, which is quite unsustainable. Also, as the industry grows, the bigger firms and stricter safety regulations are going to be likely to dominate the industry. So smaller farms can be quite disadvantaged in this case. Also, ready-made garment sector makes the export being too specialized, make the country more vulnerable to other supply shocks from the external reasons. Also, there is a lot of competition from other countries. And when Bangladesh is no longer eligible for PTA agreement, then it cannot take advantage of export conditions anymore. And there are lots of negative externalities of the industry's production, such as environmental degradation or pollution, things like that. So I should finish the conclusion by saying that the country should find the right balance between the growth of this industry and other industrial sectors. Question 2 is about the country Uruguay. Question A1, define the term budget deficit indicated in bold in the text. Budget deficit refers to a state when government spending is greater than government taxation revenue. B2, define the term portfolio investment indicated in bold in table 6. It is savings or purchase of financial assets or investments such as shares, bonds, bank deposit to earn financial return. Question B2, using information from text E and table 3, calculate the income elasticity of demand for healthcare in Uruguay between 2010 and 18. Okay, the expenditure change between 2 years, income change between 2 years. Yes, pretty straightforward. Then I can do the division, then I can get the value, which is the YD. B2, using information from table 6, calculate the current account balance in 2019. Current account balance, export, import, net income minus, and investment, these are not current account, these are financial account. So I can use the 3 values to get the current account balance, which is this much. Question C, using an externalities diagram, explain why the government should subsidize healthcare. Diagram is drawn, and I can explain as healthcare is a merit good that has positive consumption externalities such as productivity or saving of healthcare costs into society. So it needs more allocation to achieve socially optimal level, since currently it is underallocated. So that's why the government provision is necessary. B, using an ADS diagram, explain how climate-related shocks, such as drought, could affect real GDP growth. I shifted SRAS curve to the left and explained Climate-related shocks, such as drought, affect the production less efficient and more expensive. It's going to make the output less productive and less worthy, I would say. So it will reduce aggregate supply and reduce real GDP growth. Question E, using an international trade diagram, explain the effect on consumers in Uruguay if a quota is imposed on cheese imports from the EU. The quota imposed on imported cheese will cause the product price to increase because demand curve, quota curve meet in here, and the price increasing compared to PW, and quantity decreasing compared to QD without quota, and it's with quota, so the consumer surplus will decrease. Question F, using an exchange rate diagram, explain how the central bank in Uruguay can use reserve assets to prevent the depreciation of the peso. I shifted the demand curve to the right and saying to prevent the currency depreciation, the central bank can sell its own foreign reserve asset to buy its own currency. So it's going to increase its own currency demand by selling foreign reserves. So it's going to make the currency appreciated. Question G. Using information from the text, data, and your knowledge of economics, evaluate the effectiveness of the government's macroeconomic policies in achieving economic growth and economic development in Uruguay. My intro will define macroeconomic policies, economic growth, and economic development. And body 1 is about the evaluation on policies to achieve economic growth, largely focusing on the policies that are targeting more short-term AD increase purposes. Our first type of policy would be fiscal policies, and its pros are given, referring to the given text and data. So I can say that the country can increase more progressive taxation, like increase income tax rates, or it can increase transport payments. Maybe it can also increase subsidy on education. However, the limitations would be that it requires too much budget and the government deficit is already quite high. And second short-term policy would be monetary policies, and its pros would be obvious, like it can help to keep the inflation low, and it can set a target rate of inflation and plans to lower it. Also, it can contribute to encourage more investment by lowering interest rates. However, the thing is, the sector is not well developed. Also, the interest rate is already too low. So the further reduction of interest rate may not be that effective. Body 2 is about the evaluation on the policies that aim to achieve economic development, which is focusing more on long-term and aggregate supply-oriented development. First, I should talk about supply-side policies, including its pros, like interventionist supply-side policies can be used to increase spending on infrastructure and education, and it can increase competition and efficiency. Also, it can make the labor market more flexible and attract more FDI and export diversification. However, such policies may increase inequality and poverty if the market is too liberalized and too free market based. Also, supply side policy requires too long time to observe the impact. Also, excessive construction of infrastructure can damage environment. Last policy that I can recommend is industry diversification and trade promotion policies. When it comes to talking about their pros, these kind of policies can increase exports due to greater diversification. Also, it can allow greater market access to the other countries. Also, it allows cheaper imports. However, too much imports can somehow harm the domestic industries, including rural areas, industrial sectors. Also, it can create over-reliance on export of agricultural sectors and then decreasing self-sufficiency of the other goods production. All right, this is the end of paper 2. Thanks for watching. Bye.